And there you have it, the closing bell at the New York Stock Exchange. Not a great day for the stock market, with all three major U.S. stocks closing in negative territory. The Dow Jones dropped roughly 280 points.
The NASDAQ and S&P also finished in the red. The NASDAQ dipped around 3/4 of a percentage point and the S&P around 1 full percentage point. Emily McCormick joins us now. She is a reporter for Yahoo Finance. She wrote an article published earlier today tracking stock market updates. So, Emily, we saw those numbers. What was driving the market today?
Well, first off, thank you so much for having me. It's great to be here representing Yahoo Finance on CBS. And when we take a look at the market action over the course of the past several days to several weeks now, it really has been a variation on the similar theme here. Really, investors have been weighing signs that U.S. economic activity is starting to soften a bit from the reopening fueled surge that we saw last year, weighing signs that we're seeing these still persistently elevated inflationary pressures across the economy. And really, investors are trying to see how much that inflation is going to be weighing on consumer demand, which of course is the main driver of economic activity in the U.S. Now, of course, coupled with all of this is how the Federal Reserve is ultimately going to respond to these inflationary pressures. Now, of course, the Fed is going to be having their next policy setting meeting next week. So that's something that investors are really going to be waiting and seeing for. And of course, this Friday, when it comes to the Consumer Price Index report, that latest print on inflation, also certainly something to watch closely as well, guys.
And Emily, you also wrote a separate article published earlier today reporting that mortgage activity has dipped to its lowest level in more than 20 years. I thought the housing market was on fire. So why is this significant, and what do experts believe accounts for this drop?
Well, housing is an interesting part of the market to really be watching right now, because clearly demand is going down. Now, we see that in this week's mortgage application data. We've seen it in the existing home sales and the new home sales reports over the past month as well. And yet we're still seeing housing prices continuing to stay near record levels. So we aren't necessarily seeing that usual principle where lower demand translates to lower prices happening in the housing market. So I think that's why this week's housing data, this week's mortgage application data, dipping to a more than 20-year low, a 22-year low to be exact, is really significant here. We saw that, of course, in refinances down by about 75% on a year-over-year basis. So as we have these benchmark 30-year fixed rate mortgages really staying above that 5% level, really weighing on affordability here, that's something that's continuing to weigh on the housing market in terms of that affordability. And yet, of course, seeing that demand coming down as well, guys.
And Emily, you touched on this a moment ago. The Bureau of Labor Statistics is poised to release its latest consumer price index Friday. What are economists expecting to see, and why?
Well, economists are looking to see a little bit of a moderation on that top line number. 8.2% is that year-over-year annual figure when it comes to the overall consumer price index. That's still going to be just a couple of ticks below that more than 40-year high of 8.5% that we saw in March. So clearly, we're well above the Federal Reserve's 2% target. Consumers are really still getting pinched when it comes to a number of goods and services categories. These are all remaining quite elevated. Some of the areas that I think investors are really going to be watching for are those reopening categories, things like airline fares, things like used and new car prices, things like services, the prices at restaurants. All of those things are going to be really closely watched this Friday when it comes to keeping that headline number likely elevated, energy prices as well. And then on the core side, of course, when it comes to rent, those have been quite a sticky part of inflation as well, and continuing to creep higher.
All right, a lot to watch for there. Emily McCormick from Yahoo, thanks so much for joining us. We appreciate it.
Thank you.